All right, guys. Good morning. Good morning. Welcome aboard to the Morning Note. My name is Carlos Garcia, founder and CEO of GAR Capital. It is Tuesday, December 13th, 2022, 9 a.m. Eastern Standard Time. Let's go and talk about it. We know the news, obviously, if you've been following us on Twitter, watching CNBC, or getting any alerts on your phone from a business news source, CPI did beat. Also, you could read the headline of the video. So let's go ahead and go over it. If you've been doing it as long as I have, good news is great news. It feels good, but you're so used to news all the time that I'm just so numb to it now. But again, feels great that we're rallying now. Let's go ahead and take a look. Actually, you know what? Let's go ahead and start with the CPI number first, and then we'll go ahead and go around the horn. So let's go ahead and see consumer prices increase. This is from Bloomberg. This is the Bloomberg terminal. 0.1% month over month. Remember, the estimate was 0.3, so that's a beat. Well done. Well done. Good stuff. Inflation is still up, but less than expected. Remember, it's all expectations, right? That's all we care about. And again, core consumer, this is stripping out auto and I believe auto and gas. 0.2% beats 0.3%. So again, the core beat, the headline number beat. The headline number did better than the actual core. So with that being said, you're starting to see that deflationary hit due to gas prices, fuel prices. We've been talking about this for a while here. So again, with that being said, when you get a great number like that, especially when it meets expectations, let me go ahead and bring this up. We'll go ahead and see how much we're up. Yep, 763 points on Dow futures. That big spike. Let's go ahead and take a look at it together. So again, CPI number, awesome, awesome, awesome. It was a very binary event. So if you held calls, congratulations. If you held puts, oh well, it does happen. But again, a tough one all around. I did have SPY calls. I traded with the masterclass, the 407 calls. I didn't go too heavy. So that should be a nice little snack for the morning, at least moving forward. And again, guys, we've been talking about this market for the whole year. And 2022 has been a roller coaster. But the one thing I'm glad to say is that at least the script is being followed. Remember, we talked about October being the low of 3,500, that 200 weekly MA. We can go take a look at it one more time, and that was pretty much the level for 2022. Again, for 2023, could you say, yeah, Carlos, we have another risk to the downside? I'll talk about that risk here in a second. But again, you could see 3,501 pretty much held that 200-day. The 200-day was here, guys. It's just a little higher, obviously, since the stock market is higher. So again, keeping an eye on things here on the S&P. One thing that does stand out, and it's very, very important today, guys, and I will go around the horn on how the rest of the market is doing. The trend line, the trend line, the trend line, the trend line. 1, 2, 3, 4, right? Remember, we have not broken that. We just broke it. This was the same thing we talked about on the newsletter for the past couple of weeks. And again, the bull case. The bull case is 4309. That is your August rally. That was your August highs. That's the bull case for the end of the year. Again, guys, we only got 2 weeks. And again, yes, we do have FOMC tomorrow. We don't know what's going to happen. Powell could spoil the party, and I'll talk about that scenario here in a second. But again, that 4,300 number, that's your bet. That's your pretty much your bullish case for the year. I said around the case that I'm looking for in terms of base case is right around 4155, which is where we are right now. Again, we could green shoot this to 4200, 4250, and then kind of settle around 4155 as we close the books for the year. 4200 is that 100 MA on the weekly from 200 to 100, all in about 2 months. That follows the script of seasonality, like we talked about. We talked about the macro, the dollar being at the head and shoulders. We talked about yields being at a head and shoulders pattern. Again, this is nothing surprising to anyone. The only issue as an options trader last week is that you just got chopped to death. That's pretty much the worst thing that could happen to an intra-week trader, literally a day trader. If you are a swing trader or you're an investor, well, you're singing hallelujah today because everything that you've been following has been unstripped so far. Again, the bottom being in, that was called in October, the head and shoulders, on the dollar and yields, even VIX being elevated. But we talked about the put call ratios on the newsletter being at its highest point since 1997. Again, guys, none of this is surprising. The only reason we didn't really trade it on their options group was the fact that it's a very binary event. Again, one way or another, pretty much red or black. So again, this, at least the bull thesis is still going on. At least we are above major moving averages. We're now above the 200. We're back above the 100. We held the 100-day actually, but again, that trend line being very, very key. If we follow this right here, this rising channel, maybe possibly a wedge. The yellow one is a wedge that broke above. But again, you could see the rising channel. And again, now what you're going to see, guys, is the next leg higher. Do you remember when 3,900 was that big support? And we said, hey, 3,900 needs to hold. This was earlier in the month. Now you're going to starting at a new support. The new support now will probably be 4,100. And why would it be 4,100? Because that's where the intersects of the rising of the trend line so far. The trend line in the daily intersects exactly at 4,100, which is relatively close to that rising wedge. That intersects. That should be a pivot point moving forward. What I mean pivot point is that should be a retest. Again, tomorrow with Powell, we could expect, I don't expect anything, groundbreaking. 50 basis points, again, talking about how inflation is possibly peaked or peaking. Again, peaked in June based on the numbers. But again, he could also say that, hey, moving forward, it is a live meeting, or moving forward, we're not ready to do a pivot yet. Again, the market could interpret that in multiple ways. Get us back to 4,100 tomorrow at 2:30. In regards to today, could we trade this? Well, first thing in the morning, you're going to get a lot of short covering. So again, I expect a little bit of a spike. I expect some profit taking from individuals who played this trade to the long side. If you're talking about supply levels or possible resistance, at least today, it's 4,200. That's probably around the area where we may settle, maybe 41 to 80 or so. That'll get you to around a Dow 1000. Good CPI number tends to do that. Congratulations, everyone's running a victory lap. And then tomorrow we'll possibly get chopped into the 2:30 meeting. And again, it doesn't matter for long-term investors, but again, for short-term options traders, this is where premiums and time decay kick in, especially with a high IV, implied volatility, heading into another binary event, the Fed FOMC rate decision. So again, 4,100 being your pivot, 4,200 being pretty much the resistance so far. 4,300 is our bull case in terms of the end of the year. I think it's safe to say that we've hit the bottom, at least for 2022. So congratulations, Santa's in town. Let's go around the horn. Dow futures up 747 points, NASDAQ up 449, 450 or so. I do have TQQ. I've been holding that for a little bit, and I've been adding to it, or I did add to it. So I'm definitely happy for the NASDAQ move. S&P 500, again, the futures 41.39. We talked about that support. Russell 2000 up 3.2%, 1894. Crude oil, again, increasing today, up 2%, was up yesterday on some Keystone Pipeline outage headlines. Again, crude oil, like most commodities other than gold, is pretty volatile. We know the drill. Gasoline futures up 2%, again on the softer CPI, which brings the dollar down 1.27% at 103.79. So we broke that key level. Remember that 105, kind of tough nut to crack. Let's take a look at it. If you guys remember on the dollar, we'll go to the daily. Gives us a little more context on this. You know what? Let me go to the 2-year. 2-year on the daily. Just got a headline here. The Bloomberg is making my system slow. I may have to. Okay, OPEC urges caution as it cuts first quarter oil demand forecast. That doesn't make me feel good. We don't want demand to slow. This is the antithesis of a soft landing, meaning it's not what we want. Again, if demand slows, that's recessionary. Again, we don't have an earnings recession yet. Obviously, we talked about the bull case and the bear case. The bull case only so far, but the bear case is important to say, guys. In the short term, yes, again, I do believe the Santa rally is here. We're going to continue higher. Yeah, great. 2023, if this deflationary pressure continues, I can only hope that demand stays the same. If you keep getting layoffs and unemployment ticks up, demand is going to wane. People just can't pay their bills, or they just can't consume as much. And again, that is very difficult to bring back up, guys. It is very hard to create artificial demand versus creating more supply. This is why the supply chain was such a big deal. Finally, the supply chain is online. Sneakers are available, or whatever, these goods that you weren't getting in 2021. Now it's readily available. Now they're bloated inventories out of Target, out of Walmart, and all these retailers, out of Nike. Same thing with Lululemon. They got like $1.3 billion worth of excess inventory. So again, inflation has peaked, guys. We could stop talking about that now. I think everyone now, you'll watch CNBC moving forward. Now it'll be deflationary pressures. Deflation is the problem. And again, we're just going to keep moving the goalposts here. But the one key area too that we're not looking at, and again, I'm talking about at least for the stock market for 2023. We'll go over that in the end of the year review with Investment Club. 17 times forward earnings, S&P right now. 17 times. That is higher than the 10-year average. And that's with an easy money policy. I don't think that's priced in for a restrictive policy. The problem is, do earnings at least hold through? Meaning, does demand hold through as the Fed cuts or not cuts, at least slows down rate hikes? But looks like inflation was transitory, at least. I just don't want it to be deflationary because anything too hot or too cold is not good for the market. This was the biggest deceleration of CPI since April 2020. That wasn't exactly a great time either, economically speaking. Stock market, yes, that was great. Back to the dollar. Here you go. That trend line we talked about, 103.66 with that head and shoulders, and we got it. So let's take a look at it here in the 3-week. All we are is right back at that trend line. That could possibly hold. Let's see if we can get to around 100 being a big round number that everyone, at least most traders, can wrap their head around. Let's go ahead and get to the 10-year yields as well. So much to go over. So much to go over. Let's go to the daily. And again, that head and shoulders, pretty much perfection. Problem now is that now we have a gap to fill at 36.85. And again, I have my alert there. Let's see if we get that gap up. But again, now we're below the 100. Boy, how great would it be, guys, if we can get to 31.29? That would be a deflationary pressures bringing yields down. And again, guys, we talked about this. Bonds are going to bottom before the S&P does. Always does. I like Treasury bonds here, at least for a hedge for possible recession. And then you're locking in at least a great, decent rate. But again, it's slow money. Not everyone likes slow money. I completely understand. But again, government bonds, keep an eye on TLT. I talked about that with the investment club. And again, I think it's a pretty good trade if you're looking to target around 120 level. Not exactly home run hitters, but again, TLT. Take a look at it. Let's see. Is it time for heavy buying? No, not exactly heavy buying. And I don't like buying on the way up. Again, maybe we get that retest to 4,100 or below. And then again, the only issue, Bruno, is really valuations. Again, the next earnings are going to be important. We need to see, okay, now we can confirm that inflation is at least decelerating. If not, we're getting into a deflationary cycle. Now the question is, can these companies keep up? Again, looking at the numbers in terms of the S&P, 17 times forward earnings, stocks are still relatively expensive in terms of the cycle. If we're going to get really a Fed pivot and they say we're not raising any more, then I would say that's pretty much as green of a light as you can get in terms of valuations, because that means that if the stock market holds with those two factors coinciding, then it seems to be that sweet spot of pricing in terms of a stock or price discovery where, the policy in terms of monetary policy fits the earnings forecast moving forward. But again, 17 times, especially with higher rates that we're going to, waning demand possibly, it seems that it's still a little expensive right now. Technology companies notwithstanding, I think tech companies have been slammed. There's many companies out there like a Google. Apple's still relatively okay. Microsoft's starting to get on the cheaper end. There is some quality out there. I think there's going to be a rotation out of value as rates fall. So again, I love Costco, but I'm looking to possibly get out of that trade probably next year because, well, I could just hold it. It's a long-term investment. But if I was trading it, excuse me, these big value names, the Coca-Colas, the PepsiCos, the Procter & Gamble's, they're going to be rotated out as they're chasing yield now. But again, we're always chasing yield. That's basically what traders do. When interest rates are zero, you can't really save to get yield. Right now you can with a CD somewhat or a treasury bond, sure. So you're not really chasing, these big home run hitters, these high betas, the high yield bonds or such like that. But again, if rates go down, if the 10-year continues to slip lower, then you'll start seeing a rotation into those higher yielding assets. As again, you can only stay in cash for so long if you're a hedge fund manager. We talked about that 2 months ago, guys. It gets to the point where, what are you going to do? You got to make that year-end bonus. You got to make sure you're on point. Those hedge fund managers have to buy something, somewhat, and it does happen that way. I know it's interesting, but you're not going to pay 2 and 20 if you're a client when your hedge fund manager is sitting on cash. It just doesn't work that way. I don't think hedge fund investors that are in specialized hedge funds are not in it to be safe. They want to get the big home run. That, or well, notwithstanding an energy hedge fund or so. Most hedge funds are either way. All right, Henry says, I'm ready. Is the bottom in? Patron Boy asks. Again, for 2022, yeah, we called that. We said that in October, that 200-day. I still say the bottom is in, period. But again, there is other factors involved. Again, we're above that trend line. That's a really great sign. So far, Santa is here to stay, at least for 2022. So nice to see. Let's go ahead and see what we get from here. Tesla did hold support. I did talk about that on Twitter yesterday, held that 166 support. Okay, let's go ahead and see if we can trade this thing, right? Let's see what's available, what looks good. Let's always focus on the high volumes. Again, you could see here kind of a triple top on Apple. Not to buy calls here unless we break 151. So let's go ahead and see if Apple breaks 151, and then we could target the 155 calls moving forward. How's that? That's pretty much the only thing I can see with Apple, unless you're saying a reversal there. Let me get above 148 and this alert as well. And again, guys, we're just focusing on the big volume movers. Microsoft break on the 1 hour, trading at 263. Yeah, guys, looks like it is going to fill that gap to around 264. So that'll be a tough one to trade because after that gap is filled, you may just kind of chop around to that 200 on Microsoft. But that's a good sign, Microsoft above the 200. Let's go and take a look at Google. On the daily, you have a gap to fill to the downside. We're at 97. We're now above the 20-day moving average. So that's a good sign. In terms of gap to fill, we got one right here at 103. We'll be right here. As long as you really hold 97, I think Google will probably be a decent one for the 100 strike, if not the 102 strike. Maybe buy some time on that. Maybe. Let's take a look at Qs together. 297.44. All right, broke 294, obviously. So we'll get that over here. Looks like we do have some resistance possibly here at 300 and 303. We do have a gap to fill here at 308, guys. So let's go ahead and take a look and place an alert on Qs. That might be nice. Let's see if that alert goes through. There we go. So 299 may be resistance if you do break 300. You do have 303. I would say break 297. Yeah, you got to break 299.12. 299.12, and then you can possibly go for next week's, or you can go this week's 303s. Ooh, we're starting to get, yeah. We got to see if we get a little bit of a pullback, guys. Again, we're probably going to start hitting some resistance soon. Again, I don't think the Dow gets up to plus 1,000 or so, but not the best environment, man. All the move was pre-market. If you're a futures trader, you probably caught this if you were long. But again, 4,200. So we're about 50 handles away in S&P. You know, the saying goes, light it if you got it. And pretty much if you got contracts coming in here on calls, just take the profits. You're kind of running out of room here to 4,200. So I wouldn't just jump in and get FOMO either. But looking forward, this is some good news. And I'm glad to see it. So Santa's here. Awesome. Merry Christmas. We'll go ahead and catch you guys tomorrow, and we'll preview the FOMC meeting as well. So great CPI number. Let's see if we can get this baby a little higher and make it a Merry Christmas. Have a great one. We'll see you guys tomorrow. Cheers.